I want to focus this interview on the recently released Q2 results. GDP growth was just 5.4%, which is not just below the RBI's forecast of 7%, but it's the lowest growth for 7 quarters. So let me start by asking, how bad is that result?
Oh, it's not bad at all, Karan. In fact, this number should be seen in the context of the growth rates we've been recording in the last 2 years or so, year and a half, where the growth numbers have looked very good. And objectively, there was no reason for those growth numbers to be so high, except for the base effect of the pandemic, where the economy shrank. And then all the growth numbers simply got overstated because you're looking at it from a very low base, right? What you're seeing now is a course correction. We are starting to come back to something resembling normal. And my guess is that the next quarter will also not be very good.
Hello and welcome to a special interview for The Wire. Recently released data shows that at just 5.4%, growth in Q2 has badly slumped. It's the lowest for 7 quarters and way below the RBI forecast of 7%. So today we examine the full picture and ask just how bad is the situation, and secondly, how easily and quickly can the economy hope to recover. My guest is India's former Chief Statistician and presently the Country Director of the International Growth Center, Pronab Sen. Professor Sen, I want to focus this interview on the recently released Q2 results. GDP growth was just 5.4%, which is not just below the RBI's forecast of 7%, but it's the lowest growth for 7 quarters. So let me start by asking, how bad is that result?
Oh, it's not bad at all, Karan. In fact, this number should be seen in the context of the growth rates we've been recording in the last 2 years or so, year and a half, where the growth numbers have looked very good. And objectively, there was no reason for those growth numbers to be so high, except for the base effect of the pandemic, where the economy shrank. And then all the growth numbers simply got overstated because you're looking at it from a very low base, right? What you're seeing now is a course correction. We are starting to come back to something resembling normal. And my guess is that the next quarter will also not be very good. And in fact, I think in a previous interview, I had said that I expected this quarter to be sub 6%. Next quarter should also be something similar. And after that, we should be going back to where we belong, which is really around 6%, maybe a tad higher than that.
So in fact, this quarter feels bad and looks bad in comparison to earlier quarters, but the earlier quarters were inflated because it was post-pandemic.
That's right.
So we're back to what is actually the real growth rate of this economy.
This is right. I mean, so if you look at all the objective indicators, the maximum that India can grow is around 6.5% on a sustained basis. Now, you're going to get ups and downs. That's what business cycles are all about. The point is, we've been up for a long time. And now the correction has started, and we should be moving back to something which is resembling normality.
Well, in the light of what you call the correction, which you say has started, let me ask you this. The RBI, as recently, I believe, is October, projected an overall growth rate for this financial year of 7.2%. But after Q2 came in at just 5.4%, the growth rate for the first half of the year averages exactly 6%. So is 7.2% achievable, or will the RBI now have to lower its forecast?
Oh, it will have to lower its forecast. I don't think there's any question about that. But, Karan, let me also make another point. I don't know if you noticed that when the budget was presented in July this year, when the new government came, they didn't use a 7.2% growth rate. What they used was, in fact, a 6% growth rate. So clearly, there's a divergence between what the finance ministry believes and what the RBI believes.
So the RBI is, if I could use the phrase, guilty of overestimating the performance of the Indian economy.
So it would appear.
So any correction is actually something the RBI has brought onto itself by overestimating.
I would imagine so.
Now, 5.4% is also the third consecutive quarter that growth has steadily declined. It's gone from 8.6% to 7.8% to 6.7% to 5.4%. And if I heard you correctly at the start of this interview, you believe the next quarter will be again around 5.4%, not higher.
Around that number, yes. One can't be exact in the places of decimal, but it would certainly be below 6.
So in reaching the real rate of growth of the Indian economy, we're seeing a steady decline in growth over 4 or 5 quarters.
That is correct. But then look at the other way, which is that prior to that, you saw a steady increase in the growth rate and very rapid increases. The thing is that was not sustainable anyway. So what you are seeing is you had excess growth post-pandemic. Now you're getting a correction, which means that you're subpar at the moment.
So people who have said that, in fact, the growth rate is disappointing, people who have expressed a certain amount of concern, if not even a certain amount of disheartenment, have actually misunderstood that the earlier high growth rates were post-pandemic and unrealistically and unsustainably high. Now we're seeing a course correction and we're coming around to what is the real growth rate of the economy. And so the initial euphoria when it was growing excessively was mistaken, and their initial disappointment now is also equally mistaken.
That is correct. But, things aren't as bad as that. If you really look at what the economists have been saying about the second quarter growth, most of them originally had predicted somewhere around 6.3 to 6.5%. They were not talking about 7% plus. So what they were looking at was a normalization which brought us back to trend. But the fact is that if you've been running above trend, then you have to go through a short period where you will be below trend.
But it also sounds to me as if you're suggesting, maybe not in so many words, that by going out on a limb and predicting 7% for quarter 2, excessively high, the RBI has put itself up to be knocked down.
Well, in a sense, yes, because now until now, nobody has questioned RBI's keeping the interest rate high, saying that that had to be done to contain inflation. And since the GDP was doing just great, the focus on inflation was completely justified. Right? Now people are going to ask that, is it because you had an excessively rosy picture of what the GDP was going to do, you continued to keep the interest rate higher than you should have? That's the question that's going to be asked.
Quite right. Questions are going to be asked about the strategy the RBI has been following up till now, keeping the interest rate high because their focus was on inflation rather than tempering that focus by a concern for growth as well.
Yeah, that is what the mandate is. The mandate says your focus is inflation, keeping in mind, keeping in view what the growth is. And if now RBI has to, by its very nature, has to work on the basis of what its future projections are. because monetary policy takes 9 to 12 months to operate, right? So they have to make forecasts. Now, if either forecast goes wrong, the RBI may actually take the wrong decision.
And it
But
looks as
no,
if
I think it's unfair for us to second guess them on this.
But it does look as if the RBI has taken one wrong decision in forecasting 7% growth when no one else was expecting that. And when when the budget itself didn't predict 7% growth, the budget was
This is
talking
right.
about something in the area of 6.
Yes.
So one decision from the RBI is wrong. It's possible that the second decision about keeping interest rates high is also mistaken or has continued for longer than it should have.
Well, the RBI, in all fairness, could turn around and say that, look, the inflation rate continues to be at the upper end of the permissible band, with food prices running at near double digit in terms of inflation, right? And that the RBI can rightly claim that unless we take steps to curb this inflationary tendency, it's going to spill over and become a process. And then we'll find it much more difficult to contain.
One more general question before I talk to you about individual sectors of the economy. The chief economic advisor, whilst accepting that this is disappointing, has gone on record to say it's not alarming. I take it that is your opinion as well.
This is right.
So would you also go so far as to say it's disappointing? Because you began by saying, when I asked you how much bad news is this, you said it's not bad at all. So would you say it's disappointing even?
Well, you see, Karan, these are processes, right? Now, supposing I have to do a correction, I can either do it with a small amount over an extended period of time or a large amount all at once. Okay? This time we seem to have done a fairly substantial amount all at once. So if it had come down to, let's say, 5.9% or 6%, that would still be disappointing for many. But my take on that is that particular pain would persist longer. Here you're doing a sharp correction, and hopefully it's going to correct itself within a couple of quarters.
Let's then, with that in the background, look at the details. And let me start with one sector that has done pretty well, agriculture. It was 1.7% in Q2 of last year. It's more than doubled to 3.5% in Q2 of this year. How reassuring is that?
No, not at all. For the very simple reason, Karan, agriculture growth over an extended period of time has hovered around 3% a year. So if you look at what was happening, last year was unusually low. This year is a little bit higher, but on the average over the 2 years, you're still not at 3%.
So agriculture still has some way to go.
Still has some way to go to fully recover, yeah.
Which is why this is not reassuring. This is something that we actually would expect a little bit more of next time.
A little bit more of this, given what last year's number was.
Let's come to other sectors. These are all, it seems, sectors that have disappointed people. Manufacturing growth has collapsed from 2.2% compared to 14.3% last year, or 7% in Q1 of this year, whilst mining and quarrying has actually contracted. It slipped into the red by 0.1% compared to 11% growth last year. Is this serious, or is it a one-off result that's fairly easily reversible?
No, I think this is a little more serious. Because what it is suggesting is that if you think about manufacturing in particular, and mining and quarrying for sure, the data that is used is for large corporate sectors, right? And we know from the corporate data, from the corporate balance sheet and the quarterly returns that are filed, the corporate sector is doing very well, and it started slowing down towards the middle of the year. Actually, towards the beginning of the year. What you are seeing is a reflection of that. So there is a slowdown that's happening in the corporate sector. And it seems to be a sequential slowdown that's happening. But this, as I said, most people had expected it. 2.2, of course, I think is lower than what people had expected. The people would probably have said 3.5 to 4. But this was coming. Now, the question is, why is it slowing down? Now, one obvious answer that a lot of people will give is that because consumption has not done very much. So when we had discussed earlier, I think we had talked about the fact that although the GDP in the last year, for instance, GDP growth was near 8%, but consumption growth was only about 4%, which didn't make sense. You cannot produce if there's no consumption happening. I think that's getting corrected. So now, this time I have a situation where the GDP growth is 5.4%, but consumption growth is 6%. Okay? So again, we are looking at a correction happening out here.
In other words, consumption is improving slightly.
Slightly.
But corporate performance as a result is not doing so well because corporate result is making up for the fact that it had looked so good earlier on, unrealistically. Now it's slipping down and catching up with reality.
That's right, and with normality of some variety. There's the other dimension. Again, I think repeatedly in a lot of our conversations, I've been talking about the abysmal state of the MSME sector, the micro, small, and medium enterprises. I think, and one of the reasons why the corporate numbers look so good is because the kind of competition they were getting from the MSMEs had vanished. So they had the market open to themselves. And so they were increasing the market share and therefore growing very strongly. I have a sense that the MSMEs may be making a comeback. If that is what is happening, and that is the primary cause of the corporate slowdown, so if the MSME sector is coming back, it is clawing back some of the market from the corporates, which means that the corporate growth has to slow. Now, if that is the principal reason why the corporate growth is slowing, then all around it's good news for the country.
It also means, doesn't it, that the K-shaped growth we've been talking about in earlier interviews is not widening. The two branches of the K are not widening, they are narrowing.
Might be narrowing. We are not, one can't make a definitive statement yet, but I think there's a strong hope for that.
A strong hope that the two branches of the K are narrowing, not
narrowing. Yes.
Let me look at consumption at this point. As you said a moment ago, at 6%, it's appreciably better than it's been for a while because it's grown by 6%, but it is still almost 1.5% below what it was in Q1 when it was 7.4%. Although it's a lot higher than last year when it was 2.6%. So it's improved compared to last year, but it's not as good as Q1 of this year.
No, this is true. This is true. And this is going to be a process because if you think about consumption, a lot of the sustained consumption is driven by incomes accruing to the lower income groups in the country. And these are the people who derive their incomes from either the MSMEs or from informal activities. Now, if the MSMEs are making a comeback, one hopes that consumption will be stronger.
And you're also suggesting that the section of the population whose consumption is improving is the lower paid people. People who
I am hoping so. And a lot of companies are saying this, that essentially rural demand is picking up.
and this is good news.
This is good news.
Let me look at construction at this point of view. It's the second biggest employer. It's grown by a very respectable 7.7% in quarter two. But, and it's the but I'm putting to you, it's a lot lower than what it achieved last year, which was 13.6%.
Yes.
So last year's achievement unrealistic because it was coming off the pandemic, and is this year's achievement of 7% far more in line with the actual truth of the economy?
No, I think there's a compositional issue also involved out here. One is that last year, government investments, particularly in infrastructure, were at an all-time high, which was pushing up the investment numbers. This year, that has moderated significantly. And that's one of the reasons why the growth has come down. Insofar as private investment is concerned, private investment hasn't been doing much over for an extended period of time. It's been pretty much stable. So I think the main reason why we are seeing this lower investment growth is because public investments have come down.
I'll come to investment in a moment's time, but let me put two other things to you. Services, which is over 50% of the Indian economy, at 7.1% in quarter two, are almost at the same level as they were in quarter one when they were 7.2%. But I notice that services, if you look at their performance during the last two quarters of the preceding financial year, were also hovering around 6.97, 7.1%. Does that suggest that for four consecutive quarters, growth in services has stagnated around the 6.97, 7.1% level?
Yes, I think services normalized much faster. Again, if you think about it, during the pandemic, services got hit badly, particularly things like hotels, trade, tourism. These sectors were hammered. And once the restrictions were removed, the services sector bounced back much faster than manufacturing did. And so I think the services sector has attained its, what should I say, its sustainable growth trajectory, which would be somewhere around 7%.
So whilst the rest of the economy is adjusting to the real truth of the situation, services got back to reality a lot faster, which is why they've been hovering at 7% for four steady quarters.
That's right.
What about the trade front? Exports have only grown by 2.8%, whilst imports have contracted by 2.9%. And at a time when we're very keen as a country to boost exports, I take it this is not cheerful news.
No, it's not cheerful news at all. But think of what it is saying, Karan. We have a situation where the global economy is in turmoil. We know that. And therefore, exports aren't doing very much. Things may get much worse if you have the US putting high tariff walls on China. China is going to flood the rest of the world, so our exports are going to get hit even more. Trump has, in his speeches, targeted India. So he may actually raise tariffs against us. So exports are a dicey area, which means that perhaps over the foreseeable future, we may have to depend increasingly on our own domestic consumption demand. Right? What is really worrying is the contraction in imports. Because what that is suggesting is that we are simply not consuming enough, and is a reflection of what is happening to consumption, right? But now we run into a bit of an interpretational problem. I could make a case which would say, yes, consumption is weak, but it may be stronger than you think, because what was probably happening is that last year, the kind of consumption we had was the upper middle class and the rich in India were consuming a lot. They were consuming products with which are either imported or with a very high import content. Now the consumption is shifting to lower income groups who demand more and more of locally produced products. And therefore, the import demand has come off. So, it depends on how you look at this. But just taken at face value, a negative growth in imports suggests weak economic activity at home.
I take your point. Negative growth in imports is not cheerful news at all. But if your explanation holds water, and it may well, then it actually verges on the side of good news, because those people
Yes,
who
it
are
does.
the majority are now beginning to consume. Their demand is growing up. And also, if the imports are coming down as a result, it means that they are consuming domestically made things, which also means that if domestic demand is growing, we can rely more on domestic demand and afford not to export as much as we wanted to.
This is correct. Now, this may well be wishful thinking, but I hope it is true.
How confident are you of this?
At the moment, not very. I'd like to wait for another quarter or two.
So after quarter three, or maybe at the end of the financial year, we'll have a clearer picture.
Yes. Hopefully, by the time the budget is framed, they would have taken a call on this, because this budget cannot ignore the trends that we're seeing now.
Absolutely. These have to be at the very heart of the budget, surely.
Absolutely.
Hi, I'm Karan Thapar. Over the last few years, I hope you've been watching my program, The Interview on the Wire. During that period, I've interviewed doctors, politicians, businessmen, scientists, authors, and even the occasional Nobel laureate. For me, it's been exciting. I hope it's been enjoyable for you. But these, as you know, are tough times, and if this program is going to remain bold, independent, and sometimes even defiant, then I think we need your support. At the end of the day, it's a truism, but editorial independence is best defended by the viewers. So if you would like this program to remain the way it is, forthright, outspoken, and interesting, then would you consider supporting us? All you have to do is to click on the description at the bottom. But more than anything else, I hope you will continue to watch The Interview. Your viewership means an awful lot to me.
Against this background, let's come, Professor Sen, to two areas of concern for the economy, and this is where I'll bring up investments, which you mentioned a moment ago. Investment as a whole, both private and government, I believe, has grown by just 5.4%, which is less than half of what it was a year ago, and also it's the lowest it's been for 6 quarters. So would you agree that clearly investment isn't picking up as we would want it to do?
This is correct. It isn't. But the point is that we still have a situation where, at least in the corporate sector, there is a fair amount of surplus capacity available. And the corporate sector is not about to have a significant increase in its investment until the capacity utilization goes higher. And we have a fair distance to go there. At the moment, it's hanging around 74, 75% of capacity. It would need to go above 80%. So there's a fair amount of slack there, right? So I can't expect too much that end. But again, as I said, let us hope that the MSMEs are making a comeback, that they would invest, provided the banking sector makes the funds available. Now, that is a big if. The banks are not enamored of lending to the small.
So the reluctance of the banks could actually, if I can use that word, throttle whatever signs of revival you believe or hope you're seeing in the MSME sector.
May or may not. The point is the banks may have no choice. Up to now, the banks have steadfastly refused to lend to the micro and small enterprises, and they have preferred to lend large amounts, essentially for consumer loans. But we are, I think, reaching saturation there. We are starting to see fairly large NPAs, which are arising. And the banks may not find that they have no borrowers other than the MSMEs. And therefore, just for their own sort of business, they may be forced to lend to the MSMEs.
But once again, the assumption is that if investment is going to pick up over the next 2 quarters because MSMEs are investing, that again is another sign of good news.
Yes, it is.
Because they're a dominant part of the economy and they're a huge, preponderantly sizable part of employment.
Yes, they are the preponderant.
And that will in turn boost consumption and demand, and that in turn will provide some incentive down the road to private sector investment to pick up.
That's right. That's right.
So we're spotting 2 trends in the economy at the moment. One, that growth is catching up with reality. It may look as if it's declining, but it's coming closer to the real rate of growth of the Indian economy. And secondly, within that, there are signs which you're not completely confident of, but you're hopeful that will materialize, that demand is picking up, MSME investment is picking up, and therefore further consumption will improve also, particularly for those who have been the least able to consume up till now.
Yes, with the caveat that we shouldn't expect this process to take us back to 7% plus growth. The process could take us back to the 6 to 6.5% level, which I think is the sustainable level that we have at the moment.
So great dreams, and I'm using that word advisedly, great dreams that the Indian economy will reach 8% levels of growth and sustain that right up till 1947, making us Viksit Bharat, those dreams look clearly unrealistic.
Oh, they are unrealistic. There's no question about it.
6% growth, if we can sustain it, and I presume that if needs to be underlined, will
Yes.
not necessarily take us to Viksit Bharat by 47.
No, not even close.
Not even close. Finally, the last major concern, jobs. Do these results suggest that the economy could be coming around to creating the number of jobs and the sort of jobs we need? I imagine if you're right in saying that the MSME sector is showing signs of revival, MSME jobs will be perhaps increasing. They may not be the best sort of jobs, but at least it's employment.
Oh, yeah. No, I think MSME jobs are extremely important. Number one, most importantly, they are regular salary-based jobs. The salary may not be high, but it's regular, unlike casual work. So MSME job growth, I think, is critical for our employment. There is no escaping that. The second thing is that if you look at the latest employment data that's come out, it suggests that regular salaried work has actually gone up reasonably strongly over the last quarter, which is good news, because what had happened prior to that, regular salaried jobs were coming down sequentially. And what was going up was casual work, self-employment, and employment in agriculture, most of which were distress employment. But for the first time after a long time, we are seeing regular salaried jobs starting to pick up. And I don't think the corporates are doing it. my sense is that's yet another indication that the MSMEs are making a bit of a comeback.
So once again, this is a small, important element of good news.
Yes.
Finally, some of the newspapers, in covering the quarter two results, also went on to say that maybe the situation in quarter three would be significantly better, something that you doubt, I'll point out. But the paper said that the situation in quarter three would be better, both because of the October festive season and a good Kharif crop. You discount that. You think quarter three is likely to be very similar to quarter two.
I think so. Uh, because, the fact remains the festive season is roughly at the same time every year. Right? So if you think there's going to be a bump up this festive season, there was a bump up last festive season as well. The question is, will the bump up be that much greater as to make a significant difference? I have my doubts. It may be actually even less. So one needs to be a little careful with this festive season. So if you're asking the question, quarter on quarter, would it be better? Yes, almost certainly. Festive seasons always give you better results. But year on year, would it be better? And my answer would probably no.
But even on the quarter-on-quarter basis, you at the start of this interview believed that the growth figure for quarter three won't be very dissimilar to the growth figure for quarter two. You didn't expect anything around 6%, probably 5.5, 5.6 at best.
Around there, yeah.
So,
But that's again because last year, same quarter, festive season, high growth.
So let me end by pointing this out to the audience because I think it's a very important interpretation and a very important corrective that you've given us. Whilst a lot of people believe that the growth in quarter two was bad news, your answer to that question was not bad at all. And the reason you say that is because the earlier quarters of high growth was simply a bounce back from the pandemic, and we were not going to be able to sustain that level of growth for long. We're now catching up with reality. The economy is coming close to settling to what is its natural rate of growth. And that, as you pointed out, is around 6%. It also means the dreams and hopes that we have of growing at 8% for the next 25 years to achieve Viksit Bharat by 47, those are just dreams and hopes. They're unrealistic.
Oh, no. We can convert them into reality, provided we recognize that any increase in the growth rate, serious increases in the growth rate, requires the entrepreneurial class in India, whether they be big or small, to be confident of the future. If the entrepreneurs are constantly looking over their shoulders as to what the government may or may not do, then it's not going to happen. People will tend to play safe. So the famous animal spirits are being, in a sense, dampened by a sequence of events that have happened over the last 7-8 years, which I think has left the average Indian entrepreneur uncertain.
So what you're saying is the government needs to behave differently and send out different messages.
This is correct. Because you have to get the self-confidence, the mojo, as it were, of the entrepreneur back. And if it comes back, I see no particular reason why we cannot go to a growth rate of about 7.5 or thereabouts, which is what we need to get to the Viksit Bharat target.
Yes, but it also follows from what you're saying. If the government doesn't change the message it's been sending out for the last 7-8 years, if it doesn't change its behavior, more importantly, this is not going to happen. And the government shows no sign of changing its message or changing its behavior. If anything, it's entrenching itself in that behavior.
Well, that it would appear so, but hopefully better sense will prevail.
Better sense will prevail first in the government. You're hoping perhaps against hope, but let's leave it there.
Let's leave it there.
I thank you very much indeed for this interview, Professor Sen, and in particular for the interpretation that shows us two very important things. Quarter two performance, far from being disappointing, is not bad at all because we're catching up with reality. The economy is now coming back to its natural, real rate of growth. And secondly, unless the government changes its message and its behavior, which I'll add, it shows no sign of doing, we're not going to achieve the rates of growth of 7.5% that are needed for Viksit Bharat. We'll continue on at 6%, which you believe is the sort of normal rate of growth of the Indian economy once it touches reality. I
Yeah,
thank you for that.
maybe 6.5%.
Maybe 6.5%. I thank you for that interview. Take care. Stay safe.
Thank you, Karan.
Hi, I'm Karan Thapar. Over the last few years, I hope you've been watching my program, The Interview on the Wire. During that period, I've interviewed doctors, politicians, businessmen, scientists, authors, and even the occasional Nobel laureate. For me, it's been exciting. I hope it's been enjoyable for you. But these, as you know, are tough times, and if this program is going to remain bold, independent, and sometimes even defiant, then I think we need your support. At the end of the day, it's a truism, but editorial independence is best defended by the viewers. So if you would like this program to remain the way it is, forthright, outspoken, and interesting, then would you consider supporting us? All you have to do is to click on the description at the bottom. But more than anything else, I hope you will continue to watch the interview. Your viewership means an awful lot to me.